All right, let's talk about something fascinating. What if I told you there are two investment funds out there that are, well, they're identical? I mean, they hold the exact same stocks, they're run by the exact same manager, but one of them can make you a whole lot more money over the long run. The secret? It all comes down to this one tiny hidden detail that, honestly, most people just completely miss.
So, that brings us to a really important question. Is your investment portfolio leaking money? And yeah, I know, that sounds kind of dramatic, right? But think of it like this. A tiny, almost invisible fee is like a slow drip. You barely even notice it day to day. But over years and years, that slow drip can turn into a serious, serious loss of your money. And you know where this leak usually starts? It's from a simple choice you make right at the very beginning, when you decide to buy. For the exact same mutual fund, we're talking same stocks, same manager, all of it, there are two completely different ways to own it. Think of it like a fork in the road, and believe me, which path you take can lead to a very different financial destination.
Okay, so on one path, you've got what's called the regular plan. This is when you buy through a middleman, like a broker or a financial advisor. But on the other path, you have the direct plan, and this is exactly what it sounds like. You go straight to the source, the fund company itself. You might hear them called an asset management company or just AMC for short.
So what's the big difference? Well, it really just boils down to one thing: commissions. With a regular plan, that middleman who sold you the fund, they get a cut. And guess who pays for it? You do. That cost gets passed on to you. But with a direct plan, since there's no middleman, there's no commission to pay. And this entire difference gets wrapped up into one single super important number: the expense ratio.
All right, so let's zoom in on the villain of our story here, the expense ratio. This one little number is the source of that leak we were talking about. And honestly, understanding this is the key to making sure you get to keep as much of your returns as possible.
So what is the expense ratio? It's just the annual fee the fund charges to cover all its operating costs. Pretty simple, but here's the magic. In a regular plan, a piece of that fee goes right into the pocket of the person who sold it to you as their commission. In a direct plan, though, since there's no commission to pay, that part of the fee just vanishes. It's gone.
So how big of a difference are we really talking about here? Well, a lot of the time it's something like 0.75%. And I know what you're thinking, that sounds tiny, right? It's less than 1%, it feels like nothing. But, and this is a huge but, fees compound, just like your returns do. And that's where the real damage, the real cost comes in.
So let's actually see what happens. Let's see what that tiny, insignificant-looking fee does when it's left to grow and compound over an entire investing lifetime. The results, well, they're pretty staggering, to be honest.
Yeah, over 30 years, that little drip we talked about, it turns into a flood. That tiny fee doesn't just leak out, it actively works against you, compounding year after year, eating away at your money. It creates this massive gap between what your portfolio could have been worth and what you actually end up with.
Just look at the difference here. It's huge. Over that 30-year period, the portfolio with the lower fees is just so much bigger. That gap you see, that's not just numbers on a chart. That's tens of thousands, sometimes even hundreds of thousands of real dollars that could have been in your pocket. And it all came from plugging that one tiny leak right at the beginning.
And here's the thing you have to remember. This is the most critical part. You are not getting a better product for that higher fee. You're not. The source material makes it crystal clear. It is the exact same portfolio managed by the exact same person. You're just paying less for the identical thing. It's kind of like finding your favorite brand of coffee for $2 cheaper at a different store. You'd never choose to pay more, right? So why do it with your investments?
Okay, so we all agree, right? Paying less for the exact same thing is a total no-brainer. So the big question is, how do you actually do it? How do you find and invest in these awesome, lower-cost, direct funds? Let's dive into the practical, how-to stuff. Now, full disclosure, regular plans do exist for a reason. Some people really want and need the hands-on advice that an advisor or a broker provides, and that's totally fine. But if you're the kind of person who's comfortable managing your own investments, if you're laser-focused on keeping your cost as low as possible, and you've got a good grip on your financial goals, then yeah, a direct plan is almost certainly for you. It's really built for that DIY, do-it-yourself investor.
So where do you find these things? Well, in the US, it's pretty straightforward. First, you can just go directly to the websites of the big fund companies themselves. Think Vanguard, Fidelity, Schwab, you name it.
Another great way is to use a low-cost online brokerage and look for what they call no transaction fee, or NTF funds. That basically just means the broker won't charge you a commission to buy or sell them. And finally, keep an eye out for different share classes. These are just different versions of the same fund, but some have lower fees, and they often have names like Admiral or institutional shares.
So, let's wrap up with this final thought. You now know about this hidden cost that could be quietly eating away at your investment returns. The only real question left is, what are you going to do about it? Have you actually looked at your own investment statements? Do you know for sure what you're paying? Because finding out if you're in a regular plan when a direct one is available, well, that's the first and maybe the most important step to making sure you keep more of your own hard-earned money.